Saludos, hermanos. Thank you for joining us this evening. For those of you who do not know me, my name is Ricardo Marquez Moreno, also known as Don de Zulia, across at the Beta Sigma chapter of our illustrious brotherhood at Kennesaw State University back in fall of 2019. And I currently serve as the Director of Alumni Development for our illustrious brotherhood. Assisting me today is going to be our Chief Development Officer, Louis Aristoud. And we are very glad to have you all for our starting back up our Cultivo seminars. And we have a very, very special pleasure for you all for this first one, first of a two-parter. We have real estate expert and brother of ours, Ignacio Sanchez. Thank you for being with us, Brother Ignacio, for walking us through the home buying process for this part one of Cultivo seminars. We do ask that if you have any questions along the way, please use the Q&A function of Teams, and we will be having a Q&A session at the end of the call.
Cool. All right, man. Well, thanks so much. I really appreciate that, Ricardo, Luis. Thank you for everything you guys are doing behind the scenes. It's quite a process, and this is my first time, so I really appreciate the opportunity. I'm usually the type of person that I like to work one-on-one, and so this is a great opportunity for me to actually kind of work with or just share on a large platform. So thank you, and the alumni development team as well. So I'm excited about Cultivo seminar. This is the real estate portion of it, and really I want to share some kind of insider's perspective on the home buying process. And I do know that everyone is in a whole different situation. So do go ahead and write your question in the Q&A. You could also probably try the chat, but we'll definitely get through some of those questions on the Q&A. And hopefully you guys take some notes. There's going to be a lot of ideas that I'm going to share. And I know that it's going to be very helpful for you guys. I already saw a question, so I'm going to address some of those things. So throw anything at me. I'll do my best. And we'll go ahead and get started. All right. So a little bit about myself. I'm in Los Angeles, born and raised. My parents are from Mexico. I went to UC Santa Cruz, graduated 2007, which is out near San Francisco. And some of the things that I really like to do is actually learn as much as I can, travel. Spend time with friends and family, and because I like those things, I always thought as a little kid, actually, like, what can I do so that I don't have to, so that I can have some money without working so much and enjoy those things. And then, as a little kid, I knew that real estate was definitely going to be one of those things. So I don't know if you guys ever thought about that, right? Like retirement and, being able to get some passive income, not work so hard or cut down your hours, be home more, stuff like that. And real estate for me has been one of those things. So I wanted to get into the real estate world. I worked for different financial companies like Wells Fargo, Northwestern Mutual. I did investments, insurance, personal finance. That's my background. I really love doing this stuff. So kind of like what's unique is that as a realtor, I do have that background of being a financial planner, financial advisor. So I feel like I'm able to help more people because the number one thing to buy a home is getting your money right, So again, I'm gonna hit on some of those things and ask away. I do own a couple rental properties myself, 9 total, one in Miami and the rest here in California. So we do have a wealthy or a real estate investing seminar coming up June 6th. So, come to that. You guys are gonna hear more about that, and I think that's also very good for everyone here. All right. All right. So what you will learn today, first of all, what's going on in the housing market. I know we hear about it all the time. Social media is everywhere, right? So we get bombarded with different messages. So I'm just going to tell you the answer to that. how to get started in the home buying process. What are some of the important pieces? What are some key factors, do's and don'ts, some tips and strategies, and then also some secrets on when you are looking to buy a house. What are some secrets to actually do to look for a home? All right, so housing market. Now, from your point of view, maybe you can put this in the chat, but what do you think is happening in your local market? Because I can kind of talk about Cali market and a couple other states, but I know it's very local centered. So maybe drop in the chat, like what are some things you see from a national perspective? We're just seeing that there's not enough homes for sale, that the interest rates are high. We're having a lot of people wanting to buy a house. The demand is there, and inflation, right? Big talks about inflation, things costing so much. I already see increased cost of living for sure. We have challenges in affordability, right? We all want to buy, we all want to own, we all want to, but at what cost, right? Affordability is such a huge issue right now, and I'll address that as well. The high home prices, and then also kind of in the housing market is that there's not enough new construction homes coming to the market, which is affecting. Population is growing and not enough houses for everyone, right? So we're having like all these issues, all these challenges, and some of you might be feeling overwhelmed. And I totally understand that, because I actually just had my baby daughter. She's 3 months old, and I'm already thinking of buying my next house. I need more space. I need more stuff like that. So I'm right there with you guys, right? That's gonna be my next step. So I'll share some stuff what I'm gonna start doing even for myself. I'll let you guys know. All right, I do see so large investment firms are buying out. Yeah, so investment companies buying out property. So that's part of that high demand, right? The buyer competition. There's other people that are buying up properties. I'm an investor. I'm competing against other buyers, things like that. So, what can you do to be ready for, what can you do to be ready in general, right? I'm gonna help you guys out. All right. So when should you buy? So I just talked about the challenges, and for me, actually, our models says it best: is semper parati, semper junti. Always prepared, always together. Now, what does this mean? Well, I'll start with a little story how I bought my first property. All right, I was just recently graduated college. I was 18 years old. I knew that I wanted to buy real estate, and I knew I wanted some passive income. So for me, I started working in the bank, kind of learning the ways, looking at other people's bank accounts and asking questions, right? Like, how do you have $200,000-$500,000 in your bank account? And then 9 out of 10 times they say that they got it out of real estate. So out of buying their first home, their first residence, that's where you guys are at probably, right? You want to buy your first residence. They bought it, grew in value, and then sold and just kept doing it. And so it took me about 5 years to get ready, to be prepared. From 18 years old to building my credit, to saving up money, to building my team, to learning, more about buying a house, things like that. So for me, it was just a 5-year process. I don't remember having mentors or having these type of conversations. Not a lot of people in my community were homeowners. Most everyone are renters, right? And so it was challenging. After 5 years, I was able to save up enough money, build my credit, figure out the ropes, and buy my first house. And then the always together part is building your team. Who is in your team? Who are your team members, right? Do you know a realtor? Do you know a loan officer? Do you know a escrow officer? Do you know a title officer? Do you know an attorney, right? Do you know someone that knows about contracts? That's the team you need to have. And if you don't have that, well, start today, right? We'll talk a little bit about your team actually. So bottom line, the housing market is challenging, but readiness, preparation, and having a team, that's going to be really the answer to the question, when should you buy? As soon as you got all that, just buy now, or just buy as soon as you can, right? Next slide. All right. So I think this is one of the very, very key parts of the home buying process is the mindset. We hear it all the time, right? But most people don't know why they want to buy, so they get very frustrated. They don't have the patience. They don't have the time. They don't have a timeline. They don't know why. They just know it's a trend or a pattern, or maybe they feel, the fear of missing out, or just whatever that is, right? The number one thing you should have in your mind is, why do you want to buy? So a couple of you guys, if you can, put in a chat, why do you want to buy? For me, my main reason was long term, just having owning some assets and then continue to build. I knew I had to buy at least my first one, right, and just keep it going from there. Right now, I have a growing family, so now the reason I want to buy is to accommodate for that. Some people maybe on this seminar, they want to stop renting. They just feel like every time you pay the landlord, like that's money you're never going to give back. You know what I'm saying? So what's the reason you guys want to buy? There it is. Thanks, Aiden. Build generational wealth. Absolutely. Yeah, stability, freedom, wealth building. Absolutely. So, think about it. A lot of us, we're living in a generation where we're called a sandwich generation. Have you guys heard of that? We're right in the middle between having kids and taking care of our parents. Yeah, that's crazy. Our parents are either renting or they're not gonna have a place to go, or even they might own right now too. But with inflation, property taxes going up, all those things increasing, who's gonna take care of all that, right? Who's gonna take care of the kids? Because with student loan debts and all that heavy stuff, it's going to be a while until they're able to buy. I get calls all the time from young people wanting to buy, but they can't. We're that sandwich generation. All right, Abraham, we gotta move out of the hood, find a good school system for the future kids. That's right. We're typically, like, people that are renting are not in the best neighborhoods. They're in public school systems that are not the best. So these are reasons that you should, if you can, grab a post note, write your why you would want to buy, and post it everywhere. To me, that was the main thing, is just keeping the visual of why I wanted to buy, and I just made it just really helped me in my home buying process. And I kid you not, majority of my clients, if not all, that have bought their home successfully is because their why was very strong. Their reason was very strong. And so they sacrificed a lot to make that happen. But whenever I get the phone calls where, like, yeah, I want to buy something, but there's no commitment, there's no reason. I asked that question, why do you want to buy? Oh, I don't know. I saw on TikTok or I saw a post, whatever it was, but it's just someone else's dream. It's not your own, So come up with that. All right, next slide. All right. So after you thought about your why, then write down what your needs are going to be. I think one of the things is that has really helped me out, and again, I kind of drive this with clients and friends and family, is to visualize what they want to buy, right? What they're going to buy, right? So if your vision is to buy a ranch, right, then write that down. That your need or your want is a ranch, right? Or a house on the suburbs or a house in the forest, whatever it is for you guys. You know, here in California, I get everything, right? We got deserts, beaches, mountains, we got everything. So, you know, everyone has what they want to buy. For some people, it's just having a big house, small lot, or small house, big lot. They got ATVs, they got cars, they want to work on their car in the garage. You know, they want a house with a garage or a bigger garage than they have a house. um, Locations can be very important. If you're working from home, you need that extra space, right? You need that extra room. If you have kids that want to have a playroom or arts and crafts space, make sure you're writing down everything that you want, the things that you need, right? Um, Here in California, at least, I know the coastal states, parking might be an issue. So for a lot of home buyers, you know, parking is top of their list. Actually more than the living space, you know, just because it causes frustrations and all that stuff. Um, my rule of thumb for writing down your needs and wants is, after you write down your extensive list, circle the things that are non-negotiables. Meaning, if you find a house down the line that you really like, but maybe there's you know, it didn't hit all your it didn't check off all your boxes, at least it has the things that you cannot negotiate, right? Like, and that could be your top three things or top five things, whatever that is, right? Out of 100 things or out of 20 things. For me, that I think that's what's really made the buying journey, again, very good experience for a lot of people, is that, hey, we didn't get that pool, but we did get the bedrooms that we wanted, right? We at least wanted 3 or 4 bedrooms. Like, that was non-negotiable. We needed one for the puppy, one for the kitty, and whatever the case is. I needed a room for my computer, etc. You get what I'm saying? So out of your long list of needs and wants, circle those non-negotiables, because whenever you start working with a realtor, you don't want to frustrate your team. You really want to kind of have the less amount of friction possible, and being realistic, right? Because sometimes we can't have it all. But I always say, if we can check 8 out of your 10 boxes, we're winning, you know, or even 7 or 6 or 7 out of your 10 boxes, but knowing that you can then later on in the future get, you know, check off the rest by either you build something or you add something to the house that you bought, things like that. But you're winning, and as long as we hit all your non-negotiables, I think that's the key thing right there. All right, let me see. There we got a Victor saying that I help him find a house with a 1931 square feet size. Thank you.
Thanks, bro.
All right. All right. So kind of like this next slide, budget and affordability. This kind of goes with the last 2 slides of like getting the mental preparedness first before the actual doing. Uh, a lot of people start looking for a house not knowing what they want, why they want it, what they need, what their budget is, what they can afford. And it happens. It's normal. I think it's kind of like they're either looking for inspiration or whatever, you know. But I think the best thing you can do, and the best advice I can give you, is to get this done. Create a budget. Find out what your affordability is first. You know, don't go out there and then get disappointed because you make $5,000 a month and your monthly payment will be $8,000. You know, then you just you haven't even started and you already threw the white towel. You know what I mean? So do the work first. I recommend getting a budget sheet and filling it out. Add everything you can, all your income, all your expenses, and then don't miss anything, right? I'll just, you know, I do this all the time where I'm like going through my budget, because sometimes we will add a quick app or something like that, get a 7-day trial to watch a boxing match. And then next thing you know, you forgot about it, or you want to watch a soccer game or something like that. And then you forgot to take off that. And then next thing you know, it adds up. So by having a budget and checking frequently, you're able to actually, keep know exactly where your money is going, right? How much money is coming in, and for the most part, when you can see this and it's on paper, then you're able to then make adjustments, get that next promotion, switch jobs, switch careers. I don't know, whatever. Start planning your future, right? Based on your budget, based on the reality of your income streams and all that stuff. So I do want to say that with income, it has to be consistent income and income that you can verify, right? That it's on your taxes, that you get pay stubs or 1099s, things like that. It does happen where there's a lot of people, especially nowadays, that do side gigs, right? You got your side hustle, you got your little, I don't know, here in Cali we do taquerias, right? You sell tacos on the side, I don't know, whatever it is for you. Like unless you actually uh can verify that it's on your taxes and it's consistent, right? Then it doesn't count to buy a house, unfortunately. It'll help to save up money, but not as income. Does that make sense? um Expenses, your debts, liabilities, anywhere where your money goes, it'll come up at some point during the process. Some people, for instance, they have that's right. We got add everything, OnlyFans, put that income in there. So I saw that on the chat. Uh, so as far as your expenses and where your money goes, things like alimony, child support, if you have a if you're paying taxes, if you got a loan, anything like that, everything comes out. So this the sooner you can kind of create this budget and be real and try to remember everything, I would say even print out your bank statement, go last 4 months of bank statements and just start going item by item, kind of see where your money's going. And then it's also going to help out, like actually figure out where you can cut down some of those expenses. I know a lot of people, car insurance, whatever, car insurance, for instance, you can start comparing. Maybe you haven't checked prices anywhere else, and now it's time. You could save $100 there, $50 here, things like that. So don't cheat yourself when you're doing this budget sheet. How many people actually has created a budget sheet for themselves? Maybe type in the chat, if you've done it. All right, so not that many, right? Like I think that's number one thing for you guys to start when you're thinking about a house. And then and I'll give you a quick tip as well. All right, where there's some good suggestions on the chat too, where you can kind of create that budget. I'll give you some quick tip as well as far as budgeting goes. But after you created your budget, then you kind of see where your money's going and how much money you have left over. Then you move on to going online, and then you Google home affordability calculator. I did a quick Google, and there's a screenshot of it. NerdWallet just came up with a campaign where it'll help you with figure out exactly what your home affordability is. I thought it was really cool. They really want to help because it is one of the biggest challenges that most people have, right? And then so what you can do with that home affordability calculator is move things around. So if you made a little bit more money, or if you had a bit of better credit, or if your interest rate was lower, what exactly would be your affordability? And I think that one of the most common questions that I get as a realtor is I get a call and I say, hey, how much can I afford? You know, so how much can I qualify for? You know, and for me, instinctively, I want to say, well, I don't when I do work, I don't go based on the how much you qualify for. I go based on what your monthly payment affordability is, because if you have $1,000 affordability, then you can't buy nothing, right? But if you have, $6,000, $8,000, then you can buy a huge house somewhere, right? Or somewhere in the middle. So I always look at it from your monthly affordability. So look that up, do some calculations, play around with it, and then figure out what your monthly affordability payment can be. That's going to be the key for you guys. And this is what I preach all the time. All right. Your payment does determine your home price, not your home price determining your payment. Go ahead, Ricardo. All right. All right, credit score. So I don't know how many of you guys are feeling like, oh, my credit score, shit, you know. Well, I'll be honest with you guys. Like I knew about credit scores early on. I knew that I had to, because as a kid I knew I wanted to buy real estate. Like and credit scores somehow was related to that. I took care of it. I started it strong. At age 18 or whenever they gave that free shirt for a credit card, I took care of it, right? If you have good or great credit score right now, keep it up. If you don't, I would say do some work. Go to annualcreditreport.com, pull your credit report, not your credit score. Pull your credit report, find out what's affecting your credit, what's on there, what's damaging it, and then from there, kind of get things under control. I got a little icon here where 35% of your credit score is based on payment history. So that's the biggest chunk of your credit score. When I was at the bank, I noticed that most people didn't know how to set up auto payments, minimum auto payments. And it can be as simple as you forgetting, you go out of town, you got a lot on your mind, you got the money, but you forgot to make the payment, right? Set everything up on auto pay, set it up with minimum payment. So if you forget, at least your minimum payment is being made and you have good payment history. All right. So all my stuff is auto pay, everything. All right. From there on, you can always make extra payments, things like that. Amounts you owed. So with amount owed, 30% is kind of like it's your credit limit. It's based on credit limit. So if you have $1,000 credit limit, don't go past 30%. Keep it under 30%. Actually, I recommend that you keep it at zero. Just when you use your credit card, pay it off. Keep a zero balance. Right? There's nothing wrong with that. You're gonna build credit. You don't need to carry a balance, which is some way that I don't know where people got that from, but you don't need to carry a balance to build your credit. All right. 10% is new credit. Don't apply for new credit cards if you don't need it. You only need 3 in your pocket. If you can have the 10% credit mix is if you have like say a student loan and a credit card, that's already a good mix, right? If you have a card loan or a credit card and a student loan, that's a good mix. But I don't recommend getting into debt to build credit. All right. And then 15% is length of credit history. So if you guys, I don't know, anyone here kind of have no credit and they're thinking about buying a house, type in the chat. All right. So maybe this is advice you guys can give someone else. Then you can always add as an authorized user someone with no credit to your credit or someone's good credit, and then that will transfer over. All right. So that would automatically show that that person with no credit has 10 years of credit history, you know, just because they were put on that credit card with that did have credit history, right? So if you have, as a father or a parent, you know, if you got kids, as soon as you can, add them to your credit card authorized. Don't give them the credit card, but just add them on there, and then boom, your kids now got 10, 20 years of credit history. You know, so there are shortcuts, there are things you can do. You just got to have again, you know, be prepared and have the right team. All right. All right. Someone in here said they did that with their wife, and you know, and then they got good credit. So stuff like that. All right. As far as credit scores go and how that impacts the home buying process, that really helps you get the best terms, best loan terms. So for instance, if you have bad credit, then you're going to have a higher interest rate. You're going to get charged more for mortgage insurance. You might not even qualify, you know, if there's bad credit or things that are wrong with your that show up on your credit report, right? If you haven't checked what's on your credit report, not just check your score, because I know we all have apps on bank apps where you can see what your score is. But what if you have some loans that is not in your name, you know, or that's not yours, that's actually showing up. And then when you go to buy a house, you have $100,000 or $50,000 or whatever medical debt or loan debt, things like that. You get what I'm saying? All right, so it does affect your credit score. I seen everyone get approved. You know, different people get approved for different loans, but again, you pay for it. Some people, because they have bad credit or low credit or no credit, they end up having to put higher down payments. You know, so to save up for a down payment, you might need to wait another year, 3 years, 5 years to save up, right? And then that time frame, guess what happens? In that time frame, guess what happens? Prices go up. So you're losing all around, you know, start now. All right. There's a question about student loans. Put that in the Q&A. But yeah, student loans, I mean, nothing you can do about it. I always say, you know, try to always have the least amount of student loan payment you can get. So don't ever opt to go higher payments or higher anything. Just keep your student loan payments as low as you can. I don't think you should pay off student loans. If you can buy a house, keep the student loan. Typically, the reason is the interest rates are very low, so it takes a lot of time to save up money. So instead of trying to pay off student loans with low interest rate, just save up that money and just put it as a down payment, buy your house, and then later on, you know, hustle more, make more money, grow your income, get better jobs, get those promotions, you know, get those pay increases, things like that, and then pay off your student loans in the long run. I hope that kind of answered that question. All right, finances. So some of the questions, typical questions: how much should I save? How much money should I make? Should I have debt? Right. So I know there's a lot of wording here, but I did intend to kind of scare you a little bit. If you look at how much to save, these are conservative numbers, meaning like or even like these are aggressive numbers. So this is saying that you need to save up at least 3 to 6 months in reserves, 3 to 6 months of payments in reserves, right? So if your monthly payment is going to be, you know, $1,000, then you need to save three to $6,000. But of course, mortgage payments or house payments are probably going to be closer to, you know, a lot higher than that, right? Saving anywhere between 3% and 20% down payment, saving 2% to 5% towards closing costs, saving 1% of extra costs and fees that are related to buying a house, right? So you might need to make some repairs out of pocket. You might need to pay for some inspections. Those things are out of pocket, so you need to save for that. And then I get this a lot, but a lot of people say, hey, well, I can't put all my money as down payment or closing costs, because then once I need to buy the TV, furniture, and I don't want to sleep on the floor after I buy. So I totally understand. Well, then you got to save for that. Now, you don't need to save for that to buy a house. It's just that it'd be nice that once you get the keys, you have the money to then do what you got to do. All right. So if in your mind, or whenever you get a chance, look at the house you want to buy in your area. Use Zillow. Look at the house. If it's $500,000, and now you gotta have 3 to 6 months of payments saved up. If you gotta save between 3 and 20%, 2 to 5%, 1%, do the math. Now, rule of thumb is, this is my rule of thumb, all right, guys, that a minimum, and a very minimum that I recommend saving is at least 5% of the purchase price. All right. So for a $500,000 house, 5% is $25,000. So I always tell people, save at least 5% of the house you want to buy. Now, why do I say that? Is because at the bare minimum, the loan programs, a low down payment program, right, can be 3%. So that's 3% down right there. Closing costs at the very minimum is about 2%. So that's 3% plus 2%, 5%. Everything else you don't need is just good to have. You know what I mean? So 5% of whatever that, and then start with that. All right. If you don't have it, someone asked on the chat, they don't got the money. Well, I got something for you guys, but this is, I got a tip for that, but this is something that is standard. And if you're looking to buy houses that are active in the market, being sold by realtors, this is the way. All right. How much income should you make? So that's, I always want to say, like, well, make as much income as you can, right? Like, don't stop yourself, just make as much money as you can. But really, in order to get a loan, your monthly payment needs to be at least 3 times your sorry, you need to make at least 3 times your monthly payment. All right. Your housing costs, banks are going to look to see if that you don't exceed certain limits of your income. So 30% of your gross income should be kind of close to the housing cost that they budget for. Some loans and banks, they have different guidelines, but typically I always say, well, what kind of house? How much does the house you want? How much does it cost? Right? If it's 500,000, then figure out with a very low minimum down payment of 3%, what your monthly payment would be, right? And let's just say it's $2,000, so you should be making $6,000 a month. All right. And we'll get into that a little bit more, but bottom line, just save as much as you can and make as much as you can. Don't stop yourself, right? It would be gross. And this is gross income. All right, so this is pre-tax gross income. So how much debt should I have? So again, I should I pay off the car? Should I pay off the credit card? Should I pay off the student loans? Should I, I'm gonna wait for me to be debt free to buy. I understand that. I understand that being debt free is also having financial freedom. All right. Now, with the problem with that is that as you wait to accomplish that, house prices are skyrocketing. So you're missing out. You're gonna have to it's gonna take you, what would normally take you maybe a year to prepare, now it's gonna take you 3 to 5 years. All right. So I would say, if you can keep your debt, the balances, right? And I'm talking about, like, it's fine. It's not a problem. A lot of my clients, I'll take that back. All of my clients have debt. It's just being able to manage your monthly debt, right? So, like, let's just say, for example, you have a car. You just bought that Tesla or that Tacoma or whatever it is, right? You just bought it. your monthly payments are $600, $700, $800. All right. So what can you do? Should you pay off the whole balance of $40,000, $50,000? The answer will be no, but maybe what you could do is just refinance, extend the term, bring that payment down a couple $100, because for every $100 of savings, it adds like about $20,000 of how much purchase power you can get, or how much you can get approved for. So easily, like a $600 monthly payment will knock you out like close to $200,000 of how much you can you can afford for a house. You get what I'm saying? Um, so for me, I would say the balances don't matter. What matters is the monthly payment. All right. So for student loans, same thing. Like, opt for like the lowest minimum payment possible, because that's what the lenders are going to take. Right. For credit cards, it's what counts is your minimum monthly payment, not the entire balance, but your minimum monthly payment. So keep everything at a minimum. All right. I hope it's making sense, guys. But I think people think that they have to pay off the entire balance, and that's not true. All right.
Hey, brother.
Hey, brother.
Uh, we have a few
We have a
questions
few
in the
questions in the
Q&A.
Q&A.
Do you want
Yeah.
to take a brief pause?
Yeah, I'll take it. Go ahead.
All right. Give me 1 second. So brother Abe said, I plan to cash out my Roth IRA account for the down payment. What does that process look like, and what should I consider?
Yeah, I have a do's and don'ts slide. I would say don't withdraw money from your retirement accounts, and that's all retirement accounts. Um, some retirement accounts will allow you to access a loan. So, for instance, if you have a 401k through your employer, they have that option for you to buy a house, and they'll let you borrow sometimes 50% of what's in your balance, and they'll do the loan for like 10 years, right? So I would go with that route. Keep as much money as you can for your future. Keep as much money as you can for your retirement. Let that grow. I would say keep in that scenario. Look at other options. Maybe get some gift funds from family or friends, right? Gift funds is a way to that you is money you can use when someone allows you to gives you the money for you to put towards your house purchase. All right. Now I can't say that I wouldn't be able to tell you that you need to not pay it back or whatever, but it's definitely a much better option if you can uh, do other strategies for that. I would leave all retirement accounts alone, not withdrawing it, but maybe leveraging it. And by leverage, I mean borrowing against it, things like that. Does that make sense?
Awesome.
But yeah, but actually, I'll make a note though. With let's just say that is the route you want to go, then that's fine too. You could withdraw it. I mean, it's going to be tax free, right? I don't believe there's penalties on that withdrawal, probably just the cost basis of it. But you could use it, and I just don't recommend it. I'd rather like keep your future funds.
Thank you for that, brother. The next question is also from brother Abe. Student loans, how does that impact the buyer?
Yeah, so student loans get added to your debt to income ratio. So anything that's any debts that you have, monthly payments that you're making, and the lender will know, just because they pull your credit report and everything shows up there, right? So they'll know, the credit reports will show what your monthly payments are and your obligations, things like that. So all that gets underwritten. Uh, so it will show. It'll affect you as it'll increase your debts. So what I would recommend again is look at your overall debts that you have. Maybe leave the big balances alone and just knock out the little ones, the ones that maybe you have 4 credit cards, making $50 monthly payments, that's $100, and wipe those out, and keep the big balances, leave those alone.
So this is actually a great follow-up, and then Brother Kevin, I'll ask you a question afterwards. This is from Brother Alex. Do lenders ask for proof you have money to cover the down and closing costs before offering you a loan?
So lenders can receive your estimate, like you can tell them what you have and not show evidence of it. But then when you submit offers or you get an offer accepted and it's time to get your final loan approval, they will ask to verify that. So it's always better to show that upfront versus later on they don't see it. So but quick answer is yes, everything needs to be verified and seasoned for at least 2 months. And what I mean by that is that let's just say you have $10,000 towards buying a house, but you have it in cash and it's at your house or wherever, right, in your pillow, mattress, or something like that. The bank will not take that as money for your down payment. It has to be verified by putting it in a bank account, having statements now showing that money is there. That's seasoning, and it should be in your bank account at least 2 months.
And then this is the last question. And if you need any clarity, Brother Kevin could come off of mute and provide it. The owner finance paperwork, how do you go about it? The USDA paperwork could be confusing and can't make sense of it. So how do you go about completing the paperwork?
All right, so owner finance, there is a owner finance, which would be, say, if I'm the owner and I'm selling my house to you, and I can just create the term, I can be the bank for you, right? I believe that's what he's referring to when it comes to owner financing. And then that you don't do the paperwork for, you just in your mind come up with, you deal with the terms, but you go to the title company and they can create the contract for you. There's a slide for that as well. But that's owner financing. The other thing, USDA, Department of Agriculture, and that's a normal loan. It shouldn't be. It's a standard thing. It shouldn't be confusing. I would say work with a better loan officer that will explain things very easily and help you out through that. A lot of times, if you go through like a generic bank or online to do those things, you don't really have a good interaction, or you're just a number to people. But if you choose, like, let's just say a loan officer that's a direct lender or a broker, mortgage broker, they take care of you. They focus more on making sure you understand the customer service. They do all the paperwork for you, things like that. So I would say it might be just working with a mortgage broker, a better option for you, and they'll get you those type of loans.
Those are all the questions, brother, thus far.
Yeah. All right. So let me see. Go back one slide, Ricardo. All right, that go one more. I'm sorry. Go next slide. Okay. So finding a real estate agent. When quick story, when I was looking to buy my first house, I remember seeing on Facebook that one of my friends, high school friends, had became a real estate agent, and I ended up hitting her up, and she was very new, but she's my friend, and I hit her up. She took, I told her what I wanted, this what I'm telling you guys, I did for myself, right? I knew exactly what I wanted, what my needs were, what I was looking for. I did the math, I did all that, and I gave her the list. Unfortunately, for some reason she didn't use my list. She still went based on like what she wanted to sell me, and it created a bad experience because then there was friction. It's like what I want and then what the real estate agent wanted, you know. So it kind of taught me that I should interview people. I should ask for referrals, recommendations, look at track record, how much experience they have, you know, all those things. So one of the first things I would say is to finding a real estate agent. You know, ask everyone around you for any referrals. Post on social media for recommendations, and then once you have names, then you know, do some due diligence. Check Zillow reviews, Yelp reviews, Google reviews, things like that. Start scheduling your meetings. Say, hey, how can I meet you? I want to, you know, do a consultation. You know, I'm looking at different realtors and real estate agents and want to see how you know how you can help me, and they'll take you through that process. You ask questions, be very honest, like, hey, so what would you do in this case? How does this work? Can you explain this to me? Just, you know, ask those questions, and you're gonna get the responses that you get it's gonna matter. You know, in thinking back, I remember that that as much as my friend wanted to do well, she just didn't have questions. I mean, didn't have the answers, you know. And sometimes they were very simple questions, and she just didn't have the answers. So unfortunately, I felt like I ended up doing all the work for her. And yeah, so be observant in their responses. Look at their communication skills, their experience, how they're explaining things to you, what strategies and tips they're giving you, things like that. I think a good realtor, in my opinion, is someone that can really understand your situation, understand your needs and wants, and like it's not just trying to sell you something, but really is trying to give you what you want, you know, and being patient with you. A lot of my clients are typically, you know, I've had clients that in just one weekend we buy a house, or sometimes a year and a half. You know, just everyone's on a different journey, different things, and that's what, in my opinion, that's what makes a good agent, is that you're on their corner. You get what I'm saying? Um, all right. So I know we got some comments over here. So Instagram, you can check Instagram for some talented agents. Um, that's true. You know, a lot of my clients come mainly from referrals, word of mouth, and my social media posts of people that know me and things like that. So I'm very grateful. But I do think that there are a lot of agents that are really good at social media marketing, but when it comes to negotiating and doing contracts and doing like a lot of the actual work, they I don't think they're the best sometimes. But again, it's through interviewing them and getting to know them that you'll be able to that you could tell. So yeah, next slide. All right, there's a glitch, so maybe go back and forth. All right. So schedule showing appointments when you're looking for agents. Schedule showing appointments. Showing appointments is like, for instance, you're going to call an agent that you think it's a good you know, that you want to work with, and just go see a house together. See a couple houses, see what that experience is. You know, I think in for me, I get complimented all the time and give feedback that how I show houses and give instructions and take people through specific routes and be on time for all my appointments, things like that. Compared to other agents, they do a terrible job, and it surprises me because that's what we get clown for, right? And we got laughed at, like, oh, you do is show houses, but there's agents out there that do a bad job doing that, you know. So the only way you're gonna find out is by actually scheduling those appointments at no obligation. There might be some new rules coming up in the future about that, since there was that realtor settlement situation going on. But for right now, just schedule them, no obligation. It should be fine. You don't need, at least here, you don't need to sign anything yet. Attend open houses. That's where you'll see a lot of the realtors, either with their clients or that are they're prospecting. So you can meet them in person, get to know them, see how they talk to you, what they know, pick their brain. And then other places to find good realtors, in my opinion, is professional meetups, doing through your employer resources. They typically have some good outlets there, networking events, and Facebook groups. You can kind of see who's active, what they know. They're answering questions. They're very knowledgeable. That's I think some of the places where you should look. A funny story is I used to pay for to be a realtor through Zillow. So I'm not a realtor for Zillow. Zillow is just whenever someone saw a house and they'll call Zillow and it'll get routed to my phone in that area. And there was always like that one-time showing, right, by someone just wanting to see a house because they passed by or whatever. So I'll go and that was a chance where I had to make my first time impression, right? Open the door the best that I could and meet them on time, and just kind of like really sell myself. And really for me, is what they saw is what they got. So you can do that too. Is schedule. I don't know if the Zillow does that anymore because I don't do that anymore. But you can schedule those again. Schedule those showing appointments, and you're gonna see how realtors are going to do that for you. Are they going to email you? Are they going to remind you? Are they going to follow up? Are they going to what does the process look like? Because a big chunk of finding the house is showing you the houses. So next slide. All right, so now that you found the realtor, you move on to the next step, which is finding the bank or finding the loan officer and getting pre-approved. The reason I say find the realtor first is because sometimes with a trusted realtor, then they have a trusted team already with that, right? They've already built a team throughout their career. They have tried and tested loan officers that are very that can move mountains, that can do things and work through any scenario, any issues. So I would suggest that you find a solid realtor first. In my case, I do have lenders where, maybe they know the appraiser, and so we're getting what we want from the appraiser, making sure the deal doesn't fall out. They create, I have most recently there was a lender that actually kind of did some manipulations on some finances to make sure it works out, So it's just that they have the pool, right? They have the trust with existing relationships that they know what they're doing. So find a realtor first. I think that's what's going to help you big time throughout this whole buying process. So lenders, as far as lenders go or banks go, just go ahead, talk to all the banks you can. I would say have at least 5 banks on hand that you can, that for instance, I would say like your credit union, your big bank like a Wells Fargo or whoever you bank with. Then you have your online banks like Rocket Mortgage, and then maybe a mortgage broker, or you got a referral to a small lender, things like that. Just talk to all of them, let them know where you're at, what your situation is, and then you go from there. Out of that bunch, then you're gonna pick at least 3 that you're going to apply with. And by applying, I mean running your credit, giving them all your financial documents, doing all that. By doing that, you're gonna receive back what they're offering you, right? What you got pre-approved for, and that's where you're able to compare at that point the different options. So you might you might find out that a credit union would be better than a large bank, or that the mortgage broker was able to get you something that the other banks couldn't, things like that. So I would say apply, go all out with at least 3 lenders. Request the loan estimates and have them include all the fees. I've seen lenders where they'll get someone pre-approved, and they have to send the loan estimate, but they only give them page 1 out of 10, right? Well, in page 1 out of 10, you're only seeing like very minimal numbers. You're not seeing all the fees they're going to charge you in the back end, all the the extra costs of the loan and origination fees, this or that. So always ask for all the pages on the loan estimate. A lot of people unfortunately get screwed because you're buying the house of your dreams, or whatever the case is, and then it's time to close, and then you're at the table about to sign, and then you start reading all those extra numbers in the back end that you didn't see at the beginning, and that's where they get you. What are you gonna do, right? You can't cancel, you're gonna lose your deposit, all this stuff, so you just have to sign. Well, get ahead of the curve, ask for a loan estimate. I promise you that if you have 3 loan estimates, you're going to be able to very easily compare them and see what's going on. What else? With banks and lenders, the loan officer is the person that you're going to build a relationship with. So write that down. Loan officer, who is it? The loan officers that I work with, they always offer to text you, give you their phone number, for you to access them at any time, any day, even weekends. Unfortunately, whenever I had like a client that really wanted to use their bank or something like that, and we ran into obstacles, issues, challenges, whatever, it was a headache. We couldn't close at times, or we had to switch out at very end. So you're gonna realize that the relationship with the loan officer is gonna be important, right? So again, this is why working with a good realtor, they're gonna give you the right people that are gonna help you out. All right, next slide. All right, so again, going back to different banks, different lenders, credit unions, large banks, mortgage brokers, direct lenders, online mortgage companies. There's a ton out there. So I would say just go, it's okay. Just shop around, talk to people, give them a call, find out what their fees are. There's nothing wrong with that. I didn't write that on here, but you could technically run your credit with mortgage lenders multiple times without it really having a big impact on your credit score. There might be a very minimal impact, if at all, but I would say take a week of just applying at different banks, and then you should be fine. All right. But typically you have about I believe it's a 45-day window period where you can have your credit ran specifically for mortgage products without it impacting your credit score. And I know a lot of people is like, well, I don't want to apply because it's going to affect my credit and this and that. Well, no, it's not true. Just do it, and do it with multiple lenders. That way you have multiple comparisons, and they did the whole thing. So I hope that's helpful. I do have a tip. I know that we have brothers or there's people that have ITIN numbers that want to buy a house. Well, they got to shop around who has the loan programs that allow for people with ITIN numbers. Typically, a mortgage broker, they're gonna look at their all their vendors and all their relationships, and look for the provider that's gonna have that program for them. And every bank is different. I've had people with ITINs that one bank, they have to put 50% down payment, others have to put 10% down payment. So that's why it's important to shop around, but a mortgage broker will do that for you. All right, next slide. All right, so let's, I'll kind of recap. You did your mindset, right? You know what you want, you know what you need, you know why you're doing it. You found a realtor, you found a bank, the bank, you got, you know, you're applying. They're gonna ask for financial documents. So the list here is your typical list that you're gonna need. You're gonna need copy of bank statements. Typically, it's going to be 2 months, most recent 2 months. And by bank statements, I mean all your financial statements. If you have that Roth IRA, if you have that 401k, if you have a savings, an online savings, online checking, if you have a brokerage account, if you have you know, an investment account, stocks, all of that stuff. Get your most recent statements, collect that. You know, I have some life insurance policies that have cash value. Download that, send it to the lender. They're going to get all that information and then kind of help put all that together to let you know what you qualify for. Now, just because you're giving them those statements doesn't mean that that's all the money you're going to use. It's just, it's good to give it to them so that they know that you have reserves. Some banks will require some additional money that you have in the bank. So you don't want to short yourself by showing very little money saved up. Show everything. And then from there, you start the conversation like, okay, I have $100,000 combined or $500,000 combined, but really I only want to put, you know, $50,000 towards buying a house. You know, great. You know, well, we have everything we need. As a matter of fact, I encourage you to give those bank statements to your realtor as well, because for me, what helps me get my offers accepted um, is that I show that if anything is to happen, my client has enough money saved up to pay for any little thing, right? It's just mental confidence, right? They're not going to use it. You don't have to use it, but I'd rather show that we got a lot more than very tight, very limited, very little, and most likely maybe if something comes up, guess who's paying for it? The seller, right? So you know, just a little mind game there. Tax returns, at least 2 years, tax returns, W-2s, 1099s, if you're self-employed, profit and loss, LLCs, if you have your corporations, whatever you have, at least 2 years. Some banks would ask for 3 years if you own a business or 1099, but for the most part, 2 years. All right. Your most recent pay stubs, at least 1 month worth of pay stubs. So if you get paid twice a month, then you need those two pay stubs. If you get paid once a month, then one is fine, as long as it shows 1 month of year to date income. All right. Oh shit, we got. All right, next slide. All right, different loan programs. Once you talk to a lender, they're gonna tell you what is a best fit for you. But the most typical loans that I see and I work with for most clients is gonna be the FHA and the conventional loan. A conventional loan as low as 3% down, and then FHA 3.5% down. But you know, I do have the USDA loan here. It's typically no down payment. The other no down payment would be Veteran Affairs, the VA loans. And then for some of you that are maybe buying some fixer uppers to live in, they have the 203K FHA, which is a low down payment program. It'll be technically two loans, one to buy the house and the other one to remodel it. All right. So where there's a will, there's a way. There's also non-qualified or non-conventional loans. So those are people that maybe they don't have any financial documents. Well, there's loans for that. It's a little bit more pricier, higher interest rates, higher down payments, but at least you don't need to show all those documents that we talked about before. All right, next slide. All right, once you, how do you compare loans? Well, I know everyone already knows to compare interest rates, but actually you want to compare all their fees, lender fees, loan origination fees, processing fees, transaction coordinator fees, rate buy downs, discount points, lender credits, mortgage insurance. So there's a lot. All right. Now, what I'm going to point out is that Some lenders can be a little tricky, where they'll show you a low interest rate so that you go with that lender. But what you didn't realize is that you're paying, out of pocket for them to lower your interest rate. All right. So it's very important that you ask the lender, hey, is there any points being added to this interest rate? They got to say no. All right. Because if they say yes, then that means that you're going to pay for that. So I see it all the time where people are shopping around, and I have my lender give me good numbers, and then they come with their lender and say, hey, this lender, said I can get an even lower interest rate. And then when I see and I ask for those additional documents, I realize that they're gonna charge them $5,000-$6,000 on the back end to have that rate, right, or more. So something to take a look at is make sure you're comparing everything apple to apples at no discounts. And you could, if you want to, I mean, technically, if you want to, you could pay for a reduction in the interest rate, but it can be very expensive. Maybe if you want like 0.5%, you're looking at about, maybe paying $10,000-$20,000 even. So, all right, next slide. All right, so the final steps. I shortened this slide up as far as the final steps, just because, in my opinion, guys, this is probably the part that is the easiest. All right. And it's the easiest because you've already done all the hard work. You got your pre-approval, you got the right team, you got your mindset, you're being patient, you're being confident, everything is done. So now the process takes on its own. The realtor does the work. The lender does the work. The realtors makes the offers, get your offer accepted. The realtor will then get their team going, their home inspectors, their appraisers. The lender will work on your final loan approval, and you have an escrow company and a title company that are doing everything in the back end. All of this stuff should be very smoothly, very hands off. Your job is just to make decisions and things like that. Before you know it, you're getting your house keys. All right. So I think I'm not going to spend a lot of time on this, just because the biggest, most important bulk was the beginning part, the beginning slides, finding the best realtor, finding the best loan officer, and having the mind of what exactly you want, because then all of this stuff just falls into place. All right, next step. Next slide. There you go. Okay, do's and don'ts. Maybe you guys can take a quick second to kind of look at this, but start early, organize your finances, get pre-approved, work with a knowledgeable agent, do your home inspections. Now, where do you want to negotiate in this market? Being the way it is, it's still sort of a seller market. I would recommend don't negotiate before getting your offer accepted. Get your offer accepted first. Be aggressive. Get your offer accepted. Then once you have your offer accepted and are in escrow, that's when the gloves come off. That's when you can just, start throwing punches and everything, and have your agent like really work for you. Tell your agent you're looking for, price reduction, repairs, credits, whatever you can get. This is your chance. All right. The realtor should kind of guide you through this, depending on the sell, depending on the on what you're buying. Maybe they did put on the contract that you're not going to ask for anything. It is what it is, type of thing. But even at that, I always, even if we're buying as is, I always ask for something and get something. Come into the process, be aggressive on your offers, get your offer accepted. Here's another good one I recommend on the do's is, especially, I really do believe buy your starter home. Buy a less expensive home, fix it, it'll grow and get the value up, maybe sell it, buy your next house, or don't sell it, keep it as a rental and buy your next one. But if you are going to buy a move-in ready, remodeled, new construction, you're going to pay top dollar for that, right? It's kind of like buying a car, right? You can buy a used car or or one at the straight out the lot, you know, and there's a price difference. All right. What you don't want to do is make any financial changes. Don't change your jobs during the process. Don't change positions. Don't change careers. Don't mess with your credit. Don't change your hours. If you're working 40 hours, don't go and work 30 hours. Don't take vacations. I mean, you know, like take it very seriously. Make a sacrifice during that time, and anything you're gonna do, just talk with your realtor and lender. Let them say yes or no. All right. Um, all right, tips and strategies. So this is a controversial one, but I decided to put it anyway. Avoid getting down payment assistance programs. The reason I say that is because if there's like a couple offers on the house and then you're asking for help and you're asking for this or that, then they're gonna skip over your offer. You know, so if you can have the money, do it without, or get your offer accepted and then get an assistance program added during escrow, not before. You know, so kind of sneak it in the back end. Um, Maybe look for grants once your offer is accepted, things like that. But I would try to avoid it. And that's my opinion, you know, it's my suggestion. So here's another thing that would get you some money is ask the realtor for commission credit, ask the lender for credit. So you don't only have to ask the seller to give you money, but you can also ask your team. All right. For me, I always help out my fraternity brothers, friends, family. I always help them out. You know, I give a little something. So that's what I do. So buying multifamily, if it's your first house, you want to live in one, rent the other. That's very helpful. That extra unit rent count towards your income, so you can qualify for higher amounts. A lot of people don't know that, and it's low down payment too. So my first house that I bought was a duplex. I lived in one unit and then rented the other. I had no monthly payment. I had no mortgage payment because it was getting paid for. And then I moved out, rented both units out, bought my next property. All right. You can buy a house with an ADU, an accessory dwelling unit, or buy a house that you can build one potentially down the line. That's extra income for you. You can house hack. You can get multiple co-borrowers. So like, let's just say you want to buy a house, but you don't make enough money, then add a borrower, maybe your parent, maybe a relative, maybe a friend, buy something with someone else. Down the line, refinance, get them off the loan, get them off title. You know, there's those options. And then gift funds. I think I talked about this at the beginning, where you can use a friend or a relative to let you have money that you can use towards your down payment, things like that. I would say that's an option. Borrow from your retirement account. So borrow, not withdraw. That's kind of my advice. All right, next. All right, this is a secret, guys. I'm gonna give it to you straight, raw, direct. All right, but everything that sells on the market is gonna go up in price, right? People outbid each other. It's gonna be, you know, whatever. Where you get the best prices, the best terms, things like that is off market. This is you talking to your network, asking them if they want to sell their house, door knocking, leaving notes, mailing letters, going on Craigslist, you know, just looking around for houses that you can talk to the owner and let them know, hey, I'm in the market to buy a house. I'm approved. I got the money, right? Can you sell me your house? This is what I'm looking for. And believe it or not, it's rare, but it has happened, and you get a deal, right? You negotiate directly with the owner. Look for sale by owner signs. This is literally the same as if you go to the dealership for a car or you see the car for sale on the street, right? That's a for sale by owner. Same thing. Same thing with houses. You can directly go, and then that's when you can negotiate with the owner. That's where the owner financing comes into place. The owner can be the bank. So for someone here that said, well, I don't have the money to buy a house, I need the money. Well, guess what? you can tell the owner, hey, can I just start making monthly payments to you? I don't have down payment, 0 down payment, just start making payments. You know, you could do that. It's all negotiable. All right. A lot of people don't know this, but we use this a lot for investing, right? Just that's why a lot of people get go directly to the owner. What else? All the paperwork, stuff like that. You can still hire an escrow company, title company. You can hire a real estate attorney. You could even hire a real estate agent just to do the paperwork, but now it's a different cost. All right. And then the other thing too, this is a secret here, is network with realtors and real estate agents, real estate brokers, and ask for pocket listings. So I'm not sure how many people have talked to have asked for this in the past, but a pocket listing is when a realtor or a broker has a house that's not being marketed publicly, that they're only going to sell to people they know. So when I was, starting off buying my properties, I was making phone calls to all the realtors I knew and realtors I didn't know and asked for pocket listings, so do that. I think you doing these things, you'll be able to really come across a good deal, something you can buy for a lot less, work out all those terms, and you're not competing, right? Because you'll be competing if you are looking on market, Zillow, Redfin, those type of things for whatever is listed active. But you won't be competing if you're finding off-market deals, for sale by owners, or pocket listings. Have an ear out for people that are getting divorced, people that are retiring, moving out of state, that they just inherited property, or even people that are landlords. If you're renting right now, and you haven't asked your landlord that you want to buy his house, shame on you, because that's an opportunity where you don't know what the landlord's thinking. You don't know what they're dealing with. They might be thinking, hey, I'm gonna sell this house, let it be you. And you can work out whatever terms they want. You know what I mean? So I can keep going on this stuff because this is a lot of strategies that we use for investments. So next slide. All right, question. So I know I kind of, maybe I didn't cover everything, but I really do feel in my heart that I cover the most important things: getting your money right, how to prepare and stuff like that. What you will need. The actual escrow process, guys, is the easiest part. Let the realtor and the lender handle that for you. That's the easy part. Getting ready is again, it took me 5 years to get ready. But then once I was ready, it took me like a couple days to find what I wanted. And that's the type of service I like to provide my clients too. Is like, I always tell them, hey, get ready. This is on you. This is the hard work you're going to do. This is your homework assignment. This is my expectations of you. Because once I do my thing, I make it very easy, before you know it, you got the house keys. You get what I'm saying? So everything that I covered, I think, is the most important parts. If I didn't cover some minor things, you guys can reach out to me. That's my email, ignaciosanchez.realtor@gmail.com. I do have a business for my office, but I think down the line I'm gonna switch brokers, so I don't want to give you guys that email. My cell phone number, text me, call me anytime. And Instagram, Ignacio_real estate_finances. Love to just guide you guys, and I appreciate you guys being patient and listening to me. Thank you.
Brother, thank you for that. So before we close out, we got a few questions. Let's do like a flash round. So this is actually my question. So I'm actually currently debt free, but my partner has some school debt. And we're planning to move in together, should we buy or rent?
Yeah, I would ask yourselves, like, why do you want to buy? Uh, and that reason needs to be very strong. And if the answer is like, yeah, we definitely want to buy, then just skip over. Don't pay off your student loan debts. Just go straight into getting your whatever finances you have, your documents, going to look for a realtor and looking for a lender, and just getting started. Here's the reason why, okay? Because during the process of you getting pre-approved, that's when the lender can give you very, very specific advice to what to do with certain debts. All right. They can say, hey, look, I'll give you an example. I had some people kind of wait out for I don't know how long because they want to get rid of medical debt. And then and I said, just talk to the lender. And the lender found them a program where they don't consider medical debt. Does that make sense? You know, it's like, so they were waiting and waiting. And guess what? In that waiting period, the house prices went up tens of thousands of dollars, hundreds of thousands of dollars. You know what I mean? And it was something that they didn't even have to wait for because it wasn't going to show up for them. I think they passed some like laws where medical debt don't even count on, you know, against your credit report. They don't show up on your credit report, something like that. So again, you know, don't think about it, just do it. During that pre-approval process, having a good loan officer, they'll tell you what to do. But I would say move forward.
Gotcha. And then we have, is getting a second property the same process as the first one?
Yes, absolutely. Same thing. Because you already have your first, you might have equity. And the realtor you're going to work with will do some calculations, figure out how much equity you have, and then use that to qualify you for your next house. So same thing. Don't be afraid. Just get started. Look for a good realtor, a good lender. They'll put all that together and they'll tell you what the process is. I'm doing that's right now. That's the most popular thing right now is that most homeowners have at least one property and are looking to relocate and upgrade or downgrade, whatever it is. So that's very popular right now.
Awesome. And then this is in regards to credit cards. Putting your child as an authorized user only applies to that credit card, or it puts them on other cards automatically?
Just that credit card. So if you want to put them on multiple credit cards, then you have to do it individually. But I would recommend just one credit card. It's fine. It's just to give them the best credit, the one that has the longest credit history, meaning the one that is the open date, right? The longest, put them on that one. And then that's the one, make sure that you're always making your payments on time, don't carry balance. And that's it, you know. Now I have some contacts for credit repair, credit this or that, you know, and you know, there's very creative ways like where the credit company owns a line of credit and they'll add you to their line of credit to build up your credit. So there's a lot of crazy stuff that people can do, but that's where like working with the right realtor that they can see your situation or the right lender and they can see it and like, all right, let me hook you up with this so we can get to next step.
Gotcha. Any loan officers that specialize on granting loans for unhabitable homes? I see those with cash offers only. What
Yeah.
options are available to someone that wants a fixer-upper?
Yeah, that's a great question. I think for that, definitely tune in next seminar. I'm gonna talk about it. It's called Hard Money. You got hard money, you got private money, you got non-qualified loans. There's definitely options out there. So that will be more for the next one. Now for this particular seminar where you're looking to buy a residential home for yourself, most hard money lenders or private money lenders they won't let you borrow that money to use as cash because unless you're buying it at a very deep discount and you're letting them know you're going to refinance and put it into your own loan, then they won't let you borrow that money. So that would be, I would say, reach out to me because we got to find out a different strategy. Like the 203K FHA might be a better option. You can buy in the back condition that is in, and just and then they'll give you the loan to fix it up later, but it's for primary residence purposes.
Gotcha. And then we got two more questions. I'll ask the quicker one. Where area are you located in for future purposes?
Yeah, so so Southern California, right? Los Angeles County and surrounding counties. but I'm licensed in California, meaning all over California. And I think, in my opinion, we're California is such a hustle state. Maybe other coastal states too were hustlers, but because I noticed that the states, in the middle are everything is kind of cool, calm, and tranquil, things like that. So if you call me, I can give you some advice and be aggressive, but so that you can take to your agent, whoever's helping you, and just tell them, hey, I know this strategy, or I heard of this or that. And then usually that's very impressive to other agents, because they don't do the same hustle that we do here.
And then this is the final question, and then Brother Ricardo, you will close us out. The area I'm in, the new construction is cheaper than the old ones, but poorly made. But the older ones are harder to acquire for younger people. What's the best way to go around that?
Yeah, well, again, I mean, you have your needs list, your wants list. So, like, do you want a new construction or a used home, right? Like, that's going to be a personal preference and your non-negotiable. So, I have clients that they only want to buy new construction no matter what. I have clients that want to buy used homes because they have character, personality, and they're made out of, solid wood, things like that. So I get it. For me, my advice is just buy something, because you can always upgrade later. So whatever you can afford right now, right, based on the affordability calculator, just buy that, whether it's new or whatever, and then just later on, just like I said, either keep it as a rental or just sell it, take that equity, put it somewhere else into your dream home. I that would be the route that I would do, but it would be personal preference. I hope that answered.
All right, thank you for that, Brother Ricardo. Now you can close us out.
All right. Excuse me. Yes, sounds good. Brother Ignacio, thank you so much. And then for all the brothers that are still with us, if you could take a quick moment, just once you hop off, Brother Lewis has dropped a feedback form into the chat. This is something that just helps us, understand how you like these seminars and how we can better improve to make sure that we continue having these and we continue making them beneficial for the entire brotherhood. Once again, Brother Ignacio, thank you so much. Yeah. And if you all couldn't get enough of him, then make sure to register for part 2 that we will be having next Thursday to talk about what you can do with your investment property.
Yeah, absolutely. All right, guys, thanks so much. And man, love you all.